What's going on, guys? Daily Pips here. So as usual in this video, I'm going to break down the charts on how I did my top down analysis to get a trade on gold today. Okay, so basically you just start from the weekly time frame, and as you can see from the previous week, this candle gave us a very big rejection from the top. Look at that long wick right there. It's a very big rejection from the top. Okay, so it's just telling us that this week there's a possibility that price is going to be bearish. Okay, so on the weekly time frame, I just look for the next PD area that will have an influence on price, and as you can see, there's no fair value gap within here. So what I'll be looking out for is this swing low. Okay, yes, as simple as that. Then we just yeah, I think as simple as that. Because there are no fair value gaps here, the swing point is the next that price will be reaching out for, like possibly. Okay, as I always say, trading is all about probabilities. Okay, so now let's go into the daily to see if the weekly is telling us that price is bearish. Then definitely the daily should also tell us that price is bearish. Okay, they should be in line. There shouldn't be a situation where the weekly is bearish then the daily is bullish. It may happen though, but you should also, that's why you also have to pay attention to retracement. Okay, but anyways, if the weekly is giving us a possibility of bearish action, then definitely the daily should also give us a possibility of bearish action. Okay, because if we are not able to link the time frames, it's going to be difficult to get a trade entry. Okay, so as you can see, this was Monday's candle. So if price is giving us a bearish look, then definitely as price is approaching this swing low right here, there should be a probability that price will run this low. There's no way price will get here and begin to push higher. Okay, that's not what we want to see if we are indeed following the weekly contest. Okay, so now as price reached here on Monday, what we are looking out for is fair value gaps higher. Okay, not necessarily on the daily, but even the 4-hour will be good. Okay, so we just go into the 4-hour, and as you can see, you see that as price touched here, price began to push higher though, but price was consolidating. This is what we call the consolidation trend. Okay, price was actually consolidating, but it was still pushing higher. But price failed to create a 4-hour fair value gap, because if indeed price has the intention of going higher, price should have created a 4-hour fair value gap just to retrace in it and begin still push higher. Okay, but price failed to create a 4-hour fair value gap, so that was the first intention that price may turn bearish later. Okay, so yes, and as you can see, if you actually watched my liquidity sweep video, you would have gotten this trade, you would have caught this trade like so easily. Okay, very very easy. So as price was consolidation, let me tell you guys something. If price is consolidating, one of the best tools you ever have in your arsenal is liquidity sweep. Okay, that concept is very good in consolidating markets. Okay, so as you can see, price was just consolidating, sorry, and what we just have to do is to mark your high. Price created this swing high first, and price came in. As you can see, this was also a sweep, but if you check the lower time frame, you won't get your confirmations. Okay, this was like let me show you guys something on the 15 minutes, but from the 4-hour we move on to the 15 minutes, right? Let me show you something on the 15 minutes. So look at this. Okay, so look at this. Price didn't really give us any clear intention of movement, because in this while price was consolidating. Look, it was just a consolidation on the 15-minute time frame. We can even check the 1 hour time frame. As you can see, look at this. It was a sweep though, no doubt about that. That was a clear liquidity sweep actually. But look, as I said, see, price came in here. If you actually watched my video on entries, I have not really make a video on entries, but there was a video I explained entries. You see, this was the sweep right here. Okay, price had already had this 15-minute fair value gaps right here. Okay, so what will happen is, if there is a liquidity sweep and your entry time frame something like this, let's say as price was coming here, price didn't create any 15-minute fair value gap, then you would be safe entering from this small fair value gap right here. But in this case, price created 15-minute fair value gaps coming here. Okay, so you just don't enter from just one very fair value gap. Okay, what you have to do is to wait for all this, because these fair value gaps, there are two. You just have to wait for all these fair value gaps to get disrespected. And even in this case, we have a fair value area right here. Okay, I'll make a video about fair value areas. You also have a fair value area right here. So, although you are looking for bearish price action, but we are not getting the entry model right here. Okay, and eventually price didn't respect this bearish fair value gap, because in this case I know a lot of people would have entered from this bearish fair value gap, because right from the sweep, but these are things no one would teach you. You just get the experience from the market. Okay, that's why I always say it's way better to be trading on your own than to be taking signals from people, because personally, if you begin to get on the market, you begin to notice a lot of things and you'll be adjusting a lot of things. Okay, this one, no one taught me this. Okay, no one taught me these disrespect things that I'm talking about. It's from experience. Okay, so you just have to experience the live market, so that you also learn new things as well. Okay, so yes, because price this in this case, price was respecting this. Price was actually respecting this candle, sorry, this fair value gap. So that's why we failed, and also this fair value area. So it was two PD areas pushing price higher. So this very fair value gap wasn't standing a chance. Okay, so you just had to wait again. Okay, and in this case, remember, we don't trade the second. This is not actually a sweep, because if you check the 4 hour, price has already touched here. Okay, so that's not a sweep. What we have to do is, I told you guys that price, if there's a PD array, we only trade into it once. So we had this swing high here. This was the first time price touched, and if we were going to get any opportunity, was from this touch. Okay, just ignore this touch. I see price created this fair value gap here. You are not supposed to enter this, because we are just trading from the first touch. We are just trading from the first touch right here. Okay, so now let's go into the 1 hour. Let me show you guys something. So yeah, as you can see, this was the first touch right here, and we couldn't get any opportunity to enter. And look at this. This is the second touch. Please, this is not a sweep, because we've already swept this, but price failed to continue lower. Okay, so this is not a sweep. You see, if you are on the 15-minute time frame, you feel like there is also a second. No. Okay, always look at the higher time frames, and you get clarity in the market. Okay, because the second, if you need the second sweep, it should happen right here, or maybe this is another swing point, so it will happen here. Okay, okay, good. So now let's go back to the 4 hour time frame, since that's the time frame we were working on. So yes, this was the first sweep right here. As I said, we didn't get any opportunity to enter. Okay, price created this swing high again. We've not swept any swing high again, because after this swing high, this was the next swing high. This was another swing high, and then you know price swept this one. So today we saw this. This was a swing high right here. Price swept this swing high. Now let's see the difference between this sweep and the other sweeps. Okay, now let's go into the 1 hour. So as you can see, it was also a sweep on the 1 hour. So in this case, if there is no fair value gap in there, like pushing higher in the 1 hour, then you can also classify it as a sweep. So now you just decide on whether you are going to use the 15-minute time frame or the 5-minute time frame. But normally I prefer using the higher time frame, since it will give you more clarity. Okay, so as usual, this was it right here. You see, this was it. Now let me show you guys something about how to pick your target. Let me clear this first. Okay, so as you can see, this is the lag high, and from here to here we didn't get any fair value gap within this. So definitely we are just hoping price will get to this low right here, because in the lag there was no fair value gap to push price higher. Okay, so price will just run. Normally we call this place the trading, that's the most suitable trading zone. Okay, it's a no resistance area. There is nothing withholding price from dropping lower. Okay, there's nothing in the form of fair value gap withholding price, so it's actually called the no resistance area. Okay, so that's the best area to look for entries. Okay, yeah, so now that's the sweep. We go to the 15-minute time frame, and something interesting happened here. As I said, no one is going to teach you a lot of things. Like, you just gain certain things in the market out of experience. Okay, so at first, price, you see, price swept this high right here, and price failed to create a 15-minute fair value gap. As you can see, we didn't get any 15-minute fair value gap, but eventually price moved lower. Okay, so someone may wonder, how was I able to get a trading opportunity from this? So as I said, this is also based on experience. No one taught me this. So after the sweep right here, I just waited for price to 15 minute fair value gap to create another swing high right here. Okay, so create another swing high right here. So as you can see, the 15 minutes, this was the sweep. Price moved low and created this swing high. Okay, so now because I don't have 15 minute, doesn't have any fair value area. Remember, I told you my trade is always based on swing points and fair value gaps. Okay, so this 15 minutes lag wasn't having any fair value gap within, but it left me a swing high. So now what's my only way of getting in? Because swing highs also have effect on the market the same way fair value gaps do. Okay, so this was a swing high right here, so I just waiting for price to sweep this swing high and give me a 5 minute confirmation. Okay, so it's like this 4 hour sweep, 15 minute sweep, then we look for the entry on the 5 minutes. Okay, so that's what we did. So after the 15 minute sweep right here, price gave us this small 15 minute fair value gap right here. Let me just mark it out so that you see. Okay, yes, so this was it. This is the 15 minute, this is the 5 minute fair value gap. So within this 5 minute fair value gap, that was where our entry was. Okay, so our entry was within this 5 minute fair value gap, and price also created another 5 minute fair value gap. So this was a second entry opportunity from this fair value area right here. Okay, here's another opportunity for you to enter the market, and eventually price, let me just put this. Oh, sorry. Yep, yep. I just want to. Okay, yeah. So within the fair value gap right here, that was the entry. Okay. After this retracement, this green candle, you see it retraced inside, and definitely our stop loss is going to be at this swing high, the most recent swing high right here. Okay, and even price also gave you another chance to enter within this 5 minute fair value gap. This was a fair value area. You might decide to enter off of the fair value area. Okay, and eventually price reached the target. Okay, so that's how you do top down analysis. Make sure you link all the time frames. Okay, in this case the weekly time frame was giving us a bearish signal, so definitely the daily should also give us a bearish signal. Okay, and indeed the daily did, because if the weekly is giving us a bearish signal, on a daily you shouldn't see price respecting um 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 swing lows, because if price touch a swing low and it begins to create fair value gaps higher, that's not an intention of continuing lower. Okay, so if weekly is giving you bearish, you have to see price disrespecting swing lows, price just moving like it's just moving past swing lows. Okay, so in that case you will see that, oh wow, and price is indeed turning bearish. So you just have to find a trading opportunity. Okay, so yeah, that's how we got a trade on gold today. So I think that will be all for today. Bless up.